What is up, Bitcoiners? Welcome to the final episode of Fed Watch. A quick reminder before we get into the show, please go over to your podcast app and go look up Fed Watch, Bitcoin and Macro. That is where you're going to be finding this show moving forward. We shortly will be ceasing publishing on the Bitcoin Magazine feed. That feed is going to be exclusively for Bitcoin Magazine exclusive content, but we will have the dedicated Fed Watch feed. So please migrate over there. It should be live on Spotify now for everyone who is asking me about that. So everywhere where you find your podcast, you should find it. And if you can't, go ping me on Twitter and I'll do my best to fix that. We have a really great show lined up for you guys. Ansel just published a fantastic article reviewing 2020 central bank policy on Bitcoin Magazine. So if you haven't read that yet, go over to Bitcoin Magazine, go check it out. But Ansel goes through what the Fed, what the ECB, and what the Bank of Japan have been doing, why he excludes China from the update, as well as a whole bunch of other stuff in the article. And we're going to talk about it on this final show of the year. Before we get into the show, quick announcement from our sponsor. It is Level, LVL.co. Level is a really cool Bitcoin bank. Effectively, what they're trying to do is they are trying to make it so you can bank and live off of Bitcoin. You no longer need to go and buy Bitcoin with your paycheck. Your paycheck is just deposited into your Level FDIC insured bank account. And big news from Russell Okun today. He's going to be taking 50% of his salary directly into Bitcoin. And you can do that too with Level. When you get your paycheck directly deposited into LVL.co, they are rolling out a feature where you can choose what percentage of your paycheck or what percentage of that check you want automatically converted into Bitcoin. And it's converted into Bitcoin with no feed, no spread, nothing like that, directly into your Level bank account. It is your Level Bitcoin wallet. So go check out LVL.co. It is a new and really slick fintech company that is using Bitcoin and trying to help you bank with Bitcoin. They're not doing the exchange thing. They're not doing the shitcoin thing. It's really, really cool. So go check them out, LVL.co. Put BTC Media in the promo line so that way they know we sent you there. All right, Ansel, this was a really great review. I think every Bitcoiner who is interested in macro, interested in central bank policy needs to read this to get fully up to date. You want to kind of jump into this review?
What's up, Christian? Hope you had a Merry Christmas. Yes, so we talked about this a couple weeks ago. We were just shooting the shit, and we came up with this idea. Let's do a year in review of all the central bank or major central bank policies. And so I dug through all of their press releases from the Fed, the ECB, and the Bank of Japan, and picked out as many details as I could that were digestible and put them in this post. I didn't do the Bank of China, like you said, or the People's Bank of China, because their numbers are just very untrustworthy. So I thought, hey, let's just look at the banks where we can really trust their numbers and go with that. Where should we start? You want to start with the Fed?
Yeah, let's do it. So in the article, you go Fed, ECB, Bank of Japan. So let's just stick with that. So it's consistent with the article.
All right. So big takeaways from the Fed. They dropped their interest rate, their Fed funds rate, from 150 basis points down to 0. They were the only major central bank to do that out of these three, because the other two were already at 0 or negative. So the Fed had some room to go down to 0. They started doing a QE of $80 billion a month, and that's continuing. I think the first few months in March and April were higher than 80, but there was never a policy until they changed it to 80 billion per month. And they provided a potential of up to $1.95 trillion in lending programs, but not everybody, they weren't very used, which I pull out in a table in the piece here, how much was used or is still being used. Let me scroll down there real quick. So out of these lending programs that they had, I mean, this was the alphabet soup of lending programs that you probably heard about, PDCF, CPFF, etc. Well, out of all of this $1.9 trillion in potential lending, right now, there's only 85 billion outstanding. So there wasn't, that not very many people actually took up the Fed on these loans, which I thought was extremely interesting. Thoughts on
So
that?
can we talk about that a little bit? Like, I know we have discussed maybe why that's happening on this show previously, but can you kind of get the listeners up to date on, you know, this is the money creation, the burr that has, everyone's talking about, but if you look at the data, it's undersubscribed. The market is not using it.
Yeah, I don't know why that is. The same thing happened in 2019 when they went into the repo market, and they opened up this repo facility. It was really just a repo desk where they would participate in the market. They had unlimited amounts of money there available, and very few people ever took them up. I think, they might have had 10 billion a night when the overall market is $5 trillion a night that go in the repo market. So a lot of people weren't taking the Fed up on this. Now, one of the theories is that there's a stigma attached to this type of activity. So, like the Fed has this open window, right? And the businesses or banks that get in trouble can go and borrow from the Fed, but that action actually tells the market this company or this bank is in trouble, and so then the rest of their lending dries up. So there is this stigma attached to getting these rescue packages.
Makes sense. Is there anything to be said here around like the banks are, you know, the banks themselves, they have reserves, right? They're not under collateralized theoretically. Um, maybe they just don't need this, and the issue is that the banks themselves aren't lending because there's no reason to. Interest rates are so low. There's such a small pool of people with good enough credit for them to actually, be worthwhile for them to you know, make out these loans or take or put out loans. What are your thoughts on that?
Yeah, that's true that this time around, this financial crisis is the banks are very well capitalized. So in 2008 and 9, that was a banking crisis. Uh, but this time, yeah, they are fully capitalized and ready to go. And they, I think maybe some of the lending happened directly from the government, like from the Treasury with these rescue packages that they had out there, and people didn't have to go and borrow from the Fed directly. That could be part of it. Um, but yeah, I don't know why these programs were not used to their fullest extent. You would think, especially like the Main Street Lending Program had a possible $600 billion, and right now there's only $6 billion outstanding. So they're just, people are not taking the Fed up on these things. I think that the bottom line is the Fed has, they did a lot of monetary policy this year, very nuanced monetary policy, but they didn't do the most per GDP. So to tie this into the next two here, the ECB did roughly the same amount, but their GDP is smaller. And Japan did more, and their GDP is much smaller than the US. So I think if you're comparing central banks and monetary policy, my takeaway from the Fed is that they tried to do a nuanced approach and really get in there with it and not just flood the market like we'll see in the ECB here.
Interesting. Okay, cool.
So the ECB, they started 2020 already doing QE because they've had many like financial crises in the last 10 years, where the US, 2008 and 9, we kind of reflated and recovered a little bit until 2020 or 2019. Well, every 2 or 3 years, the ECB is going through a crisis. And so they were still printing 20 billion euros per month as part of their QE programs. And their interest rates were already at zero or below zero. So that's a pretty bad place to start a financial crisis, if you ask me. Their response was just one big program, the Pandemic Emergency Purchase Program, PEP. We talked about it on the show here. It started as 750 billion in March, got raised by 600 billion in June, and finally another 500 billion in December, just a couple weeks ago. So they have one program. Within this program, of course, it's a little bit more nuanced, but where the Fed had all of these different programs, they have one program. The ECB has one program, and then they nest everything under that. So I thought that was really interesting. Any comments on that?
Well, I guess kind of curious, like, are there any political or structural reasons why these two central banks have kind of taken different approaches?
That would make a lot of sense. I don't know. Possibly.
Like in terms, yeah, I don't want to dig into this too much. I know that in the article you tried just to display the data and not necessarily like assume or come to any conclusions. So I don't want to do that too much here. Can you kind of break down a little bit more about like what was in the ECB's program specifically? Did they try to target similar groups? Was it undersubscribed? Like, how did it work? Can we talk about that?
Sure. I don't know about the undersubscription. I think because they increased it twice, I would assume that they had quite a bit of demand there. So it was really focused on commercial paper, but you had to have sufficient credit, right? So you had to be a bank or a large business to qualify for a lot of these things. That was in the first thing in March. Then in June, they expanded that to make it a little bit easier for other people to qualify to get these loans. But remember, these are all loans. These are not grants or anything. So these need to be paid back with interest, at interest, even though the ECB's interest rate is negative 50 basis points, which it stayed at all year. They didn't change their interest rate at all year. These loans will need to be repaid. So that is something interesting. And the last one that they just passed in December, really, I think it was just to up the total and expand the deadline. So this program is supposed to now continue through March of 2022. That's all the detail I have on this.
Any conclusions that you want to like have of the ECB before we jump over to the Bank of Japan?
Well, I think it's unlikely that they will ever stop QE. They have never stopped QE since the day they started, pretty much. And they are doing it more and bigger than the Fed is, especially relative to their GDP. So if we were to see any inflation from this, I would just say the ECB would probably be a place that this inflation would show up sooner rather than in the United States with the dollar.
And right now, based on the data, we're seeing crushing deflation in the ECB. Is that correct?
Correct. The euro is hitting multi-year highs against the dollar. And again, if all these loans need to be repaid, remember they're having to repay them with appreciated euros, which some of these countries might not like, might cause some internal conflicts there within the Eurozone.
Yeah. So a stronger euro is really bad for these loans that have to be repaid by these businesses that have been wrecked by policy, effectively. They've been wrecked by policy. I had a question. I'm blanking out on it. I mean, it seems to me, okay, so it came back to me. Okay, so I was actually reading a tweet. It was tweeted out by Stephanie Kelton regarding Congress's stimulus package and how some conservatives were saying the stimulus should be given to people who actually need it, not just everyone. And the person was commenting that Stephanie Kelton was retweeting was saying, no, we don't have a good way of assessing who needs it now, who needs it and who deserves it. 2019 was very different than 2020. We need to give everyone the stimulus and then we can tax them back in hindsight or whatever. And that to me demonstrates, even from the proponents of central banks should have more control over monetary policy, that they can't effectively deliver stimulus. Like they can't effectively deliver funds. they can't effectively reallocate capital. Like structurally, they can't do it. They don't have the information they need. And therefore, they're either not, they're gonna be extremely biased on who they give, resources to, like what the ECB is doing at first. You have to be a big business to get it, or they're gonna give it to everyone and then have to like figure out how to claim it back in some way, which they never do. Right? They effectively, if it's out, it's a grant or whatever it is. It kind of never gets reclaimed. I'm just kind of curious, where's the biggest pain point? Like, why can't these central banks, in your opinion, create inflation? Why can't they get funds to where they need to be?
Well, I mean, this hits at the heart of this inflation deflation debate. Why they can't do this, because it takes two to tango, right? You need to demand, lenders need to want to lend, and borrowers need to want to borrow. When the interest rates are so low, borrowers would like to borrow, but lenders don't want to lend. It's too risky at 0%, right? They need to have some return on their loan, because risk is not zero. I don't care who you are, the risk is not zero for that borrower. And so when a bank looks at making a loan and they're going to get 0%, that is not enticing enough for them to lend. And so that is the natural progression of a credit-based money, in my opinion, is you keep adding debt, you keep expanding monetarily, and you get to a point where the debt burden gets too large and people don't want to lend. There is enough money out there to lend, but nobody wants to lend it.
Yeah. I mean, it makes sense. And it is the solution from a fiat perspective what the MMTers are calling for, which is just screw debt. Like, let's start just issuing as we need it. And like, that's what the treasury is for.
Yeah, but that has never worked. That's been tried many, many times throughout history. Different places in colonial United States tried it. Different places in Europe obviously have tried it. Anytime they try pure fiat money like that, it doesn't last very long. It only lasts a couple years before it goes bust. And if they were to transition to something like that now, try to transition, it would be extremely inflationary almost immediately. And I think that it would really hurt the global economy. I've said on my podcast before that I think it could take the global economy down by 90% if they try to do something like this. So I think these central bankers are aware of this. They know that they can't do anything too drastic, or they threaten to crash the whole system. And so they would rather extend and pretend. That's what everybody has been saying that about politics for so long, and about the debt ceiling and all this stuff with the fiscal policy. But the central bankers are doing the same thing. They will extend or pretend. They'll stagnate until Bitcoin can take over.
Yeah, well, two parallel systems. It's a piece I'm actually going to be writing talking about the extend and pretend, and then Bitcoin and gaining in liquidity simultaneously. All right. Well, I feel like I took you on a little tangent there, but let's transition over to what the Bank of Japan has been doing.
Okay, so the Bank of Japan is the oldest running QE program. They've pretty much been running it nonstop since 2003, I believe, is when they started QE. In 2013 they started what's called QQE. And what does that stand for? Quantitative and qualitative easing. So they're going at it all guns a-blazing. They came into 2020 already on QQE with interest rates at zero, pegged at zero. They have been trying to do yield curve control for a long time. So what they do is they peg the short-term rates at negative 10 basis points, and they peg the 10-year rate, try to peg it at zero. So that is how they're trying to control the yield curve over there. So they're coming in the year already purchasing 80 trillion yen annually. And that's about $770 billion is what their QE program was before 2020 even started. Then in March, they added a bunch of things. They added 8 trillion yen in purchases of um, general debt, I guess. They have some targeted things like for what do I have written down here? ETFs and REITs. They buy up to 12 trillion yen in this program of ETFs and REITs. And let's see. That's all I have for the focus stuff. But I know that they do a lot for corporate paper, like they buy specifically corporate bonds and corporate paper in a different program. So that's separate from their general QE buying of government JGBs. And that's all I got. Thoughts on this? Muted.
Yeah, I feel like this is really where things kind of get way over my head. I mean, personally, like I'm not as familiar when it comes to like yield curve control and stuff like that. So I don't think I have anything um, super educated to add. But what I would say is that, I mean, if you look at these three central banks in succession, it goes the Federal Reserve, which is on the way to start acting more and more like the ECB, which is on the way to start acting more and more like the Bank of Japan. Like they're all progressing through whatever stage in this, similar global crisis that they're in. Japan started first. The ECB really kind of got going in high gear second, and then here now with coronavirus, the Fed, before coronavirus, but exacerbated by coronavirus, the Fed is now entering into this kind of like QE death spiral, right? It's like they talk about the Bitcoin hash death spiral, which is there's no evidence of it, but we can see very clearly here that there is a central bank QE death spiral. And I mean, it's really incredible just kind of seeing the progression.
Yeah, Japan leads everything. So if you want to know what the ECB is going to do this year, look at Japan 4 years ago, most likely. And for the US, we're just about 8 years behind Japan. It's nothing's new. And that's one thing I think is amazing when we get into the inflation deflation debate is like, guys, Japan has quote unquote printed 10 times more money than the Fed has relative to their GDP, and they have deflation. Like I don't understand how people think the US, who is the least offensive out of all of these central banks in their quote unquote printing, how the Fed is going to get the inflation. So I end the article here with a chart that shows this. So the BOJ, the ECB, and the Fed, their central banks' balance sheets relative to their GDP. The Fed is at, oh man, let's see, what does it say? The Fed is at 33%, the ECB is at 55%, and the BOJ is at 126% of GDP. And that is not government debt in Japan. That is their central bank's balance sheet. So pretty crazy numbers.
So, I mean, how long can this go on? Like, that's the ultimate question, right? Gold bugs have been calling for the crack up boom for decades. Is this time different, or can extend and pretend, or pretend and extend continue?
I don't know. I think it just continues and it adds incentive to people to come to Bitcoin, right? To flee, not flee inflation, but flee stagnation. And we've talked about that many times on this show. But if you look at this green line on this chart for the BOJ, it's pretty much straight up to the right for the amount of quote unquote money printing they've had. And their economy is stagnant. It's grown at like 1% for the last 20 years every year. So I expect that to be exactly what happens to the West, the rest of the world. I don't see why anything should change except for Bitcoin, right? Bitcoin is where this money will slowly leak over to, where the value and the growth will leak over to. We've talked about this many times. I think you agree.
Absolutely. Absolutely. So, I mean, let's kind of end this like looking forward into the beginning of next year. Since the last time we recorded, I think Bitcoin's price has gone up about $7,000. So that's been pretty incredible to watch. Like, what's your sense moving forward? It seems as though people are extremely bullish still. I haven't really seen the price show any sign of weakness, like narrative wise, price wise. What are you anticipating here?
Well, we're at the start of the bull run for sure. I think there will be pullbacks along the way, so just be careful that you don't get squeezed. It's hard to know exactly like when there will be pullbacks, of course, because there's no horizontal price structure to measure off of here. So we're kind of in the blue sky country, and we'll see where it goes. I think that right now we could be in store for some consolidation because we're around the end of the year. We're going to have maybe some selling for taxes, maybe some selling for rebalancing and things like that in portfolios. So we could be dealing with a little bit of a pullback or a little bit of a consolidation at this time, but we'll see. I mean, there's a lot of demand from a lot of people. Like you were saying, the football player that is putting 50% of his salary into Bitcoin. There's a lot of those types of stories, and that's not small demand, right? So the price could just keep going.
Yeah.
Your thoughts? What are your thoughts on the price?
Yeah, I'm going to tease a piece that I'm doing with a pretty famous Bitcoin bull. And the idea is, Bitcoin was a quote unquote illegitimate asset, and it is transcending into a must own asset. So now the entire world is realizing that they're short Bitcoin. So that's very different than in the past. So a lot of Bitcoiners kind of are using heuristics from the last 3 cycles, which makes sense. But Bitcoin takes the path of most pain. So if everyone thinks it's going to be a slam dunk, this is exactly how it's going to happen. Again, that probably means it's going to be different this time.
Well, it'll be different slightly in the details, but it won't be different in the overall structure.
Okay. So can you elaborate a little bit more on that, and then we can close this one out?
Yeah, just okay. So it'll be different. It'll rhyme, right? Like history doesn't repeat; it rhymes. Don't think that it's going to be terribly different. It's going to look pretty much the same, just maybe at a grander scale or something like that. But yeah, don't expect it to be too much different than the last time. Price will still go up. People will still FOMO in, and there will be a mania phase, and then there will be a correction, just like every other time.
Yep. I mean, that is the deep consensus. And just to tease the piece or the pod is, we will be exploring some alternative ideas to that deep consensus. Ansel, let's close this one out. What are your final words?
Nothing. I'm excited. This article will be coming out on Bitcoin Magazine. I think by the time that this podcast drops, it'll be on Bitcoin Magazine. It was fun, and yeah, guys, this is what you get from this show: is you get me digging through press releases from central banks and making some tables of all of their different monetary policies. And I didn't draw conclusions in the post very much, but I will just say that, look, this central bank balance sheet stuff is not inflationary. It is deflationary. We will continue along the road of stagnation, and the inflationists, they can't tell me why it's different this time. So that's it.
All right, guys. If you have an opposite opinion, tweet at Ansel Lindner on Twitter. Go and find his Bitcoin and Markets Discord. That's a great way to get involved with Ansel, and he has a great community in there. And yeah, go follow at Bitcoin Magazine. You can follow me at CK_snarks. And keep an eye out. We are continuously pumping out fantastic Bitcoin content. So a lot of good stuff. Last reminder, subscribe to the new FedWatch podcast feed. All right, guys. Peace.